If you're a loan officer watching this, likely that your pipeline has been cut back significantly, especially your agency loans, meaning the loans that you originate using tax returns. And that's okay, because that's basically what happened to everyone, including my pipeline. Luckily enough, over the past 8 years, I've been not only originating agency loans, but hard money, construction, and commercial loans. And quite honestly, that's the one safe haven that kind of carried my company, my pipeline, through this storm of interest rates going through the roof. Now, likely, you're sitting there scratching your head, you're probably clouded, and you're probably trying to figure out what's next. Well, this is an opportunity that you may be able to take advantage of. You simply have to transition to open up your menu of loans to have more options available. You could learn about it fairly quickly if you're already in the business of doing loans as an originator. Let me tell you this. When somebody's getting a mortgage for a bridge loan or a hard money loan, think about it for a second. They're already paying 8, 9, 10, 11%. They're not that rate sensitive because basically they're coming into a transaction simply to do something that's gonna make them more money on the other end. So again, them not being rate sensitive creates an opportunity for you simply because we're quoting subprime mortgages today 7 to 8%, right? So if private money is anywhere between 9, 10, and 11, that's not such a big difference. Person is a lot more likely to just say, you know what, I don't want to have to jump through all these hoops. Let's cut through the red tape and get me to the finish line in a week or two, and we're good to go. So think about that for a second. Now, with interest rates being so much higher, qualifying people becomes so much more difficult, jumping through so many more hoops, rather than just originate a private money loan, a hard money loan, get this guy out the door in a week and a half, and he or she is happy, and you've earned yourself a commission quickly, a lucrative commission. That's pretty amazing, all right? So that's obviously number one. Number two, all commercial loans, transitioning to commercial, all commercial loans have a due date typically of when they expire. You see, most commercial loans are not like a 30-year mortgage where somebody secured a low interest rate and that's it. They're not coming out of that loan. Most of them have to, which means that every 3, 5, 7, or 10 years, typically, they're gonna have to refinance that mortgage. So if that's the case, why not learn about how you're able to do that? You don't even need an NMLS license, and you can basically originate almost nationwide. The loan amounts are bigger. If you just think about something, if you buy and sell something that's small, the margin is small. If you buy and sell something that's larger, the margin is larger, you make more money. It's the same concept. So you're used to originating in your market, say, whatever it may be, 3, 4, 5, up to $1 million loans for residential. Now I'm in LA in California. Loan limits here and the typical loan size tends to be a little bit higher than other parts of the country, but still, it's very hard to compete against the commercial arena because basically every decent loan is $1 million plus. A lot of lenders, A-type lenders, don't even like to touch a loan unless it's more than $1 million. And if you're making 1% on a minimum loan amount of $1 million, that's a pretty sizable commission that somebody has to refinance regardless of where the interest rate market is. And that's why that creates a huge opportunity for you. Now, I've noticed something else. A lot of the loan requests coming through the door have actually been for construction financing. And that's something that I can walk you through, but there are 2 ways to do that. As a matter of fact, there's also 2 ways to do a commercial loan. We could do it conventionally, and we could also do it as a hard money loan. Same thing with construction. We can do it conventionally, And we could also do it as a hard money loan. What I've noticed, as these interest rates have been going up now, all of a sudden, a lot of people are jumping in to wanting to develop things that they actually purchased during the down market. So they actually got it for a pretty decent price, and they've been working on permits and so forth. You know, that process generally takes a little bit, and now they're in a position where they want to build it. Same exact thing, you know, 1.5% origination on the loan balance that you're giving them to develop, whether it's a single family, multifamily, it doesn't really matter. So all these three groups, categories of different products that are available to you to originate, so you're not stuck having to only originate residential mortgages, which, as we all know, is very difficult right now. All right, so if you want to learn more about it, I wouldn't be suggesting this to you unless I first-handedly am experiencing getting a lot more flow on those type deals than I've ever had, as opposed to originating single-family, you know, mortgages. Anyways, if you want to learn more about it, there's a link in the description below. You can click it, answer some questions. We can jump on a phone conversation, go through it. There is a program that I'm developing, pre-launched the program, that would walk you through learning how to originate commercial, hard money, and construction loan. And hopefully this may be a ticket for you to, you know, weather the storm. If you're not interested in learning anything else and you don't want to develop your skill set, and that's perfectly okay, then we could actually partner up on some of these deals. As long as you have a licensed broker shop, I can actually write those deals in to my term sheet and then present them to the client for signature, and then both companies get paid respectively through closing of escrow. Okay? Again, it's not NMLS restricted where everything's got to go through the lender's estimate. As long as it's presented on a term sheet and it's sent to escrow to disperse at closing, that's perfectly okay. Appreciate you guys watching this. Take a look at the description below. Look at the link. Click it if you want to learn more. Jump on a phone conversation. And hopefully this helps you transition in this crazy market. All right? Take care, guys. Bye-bye.